to start with what most people understand a traditional mortgage to be. You want to buy a house and need to borrow money in the form of a loan. You need to meet certain criteria to qualify and prove you can pay back the loan. Over time, your bank account decreases as you make monthly payments and reduce the balance owed. The remaining equity in the home will increase or decrease depending on the housing market. A reverse mortgage works backwards. You already have the equity in your home and you may or may not have a mortgage on it. Instead of making monthly payments, you would be deferring the payments. You will save the monthly mortgage payment back into your bank account and you will make one big payment at the end. Interest will continue to accrue as you are deferring the payments, so the loan balance will grow over time. The remaining equity may be more or less depending on the market value of the house when the loan is paid. What's the difference? The major difference between a reverse mortgage and a traditional mortgage, aside from the monthly mortgage payments, is the qualifications. A traditional mortgage, you have to prove you can repay the loan. A reverse mortgage has no such qualifications for repayment. Instead, you have to prove you can keep up the taxes and insurance. Since reverse mortgages are an FHA program, it must be on your primary residence, and you have lived in the home. Another major difference is that the reverse mortgages are only for people over the age of 62. Are they expensive? While the closing costs in the past used to be excessive, they have recently been reduced to resemble the costs of most traditional loans. These closing costs are federally regulated and are tied into the loan, so there are typically very few out-of-pocket expenses. How much can I get? The amount of money a borrower qualifies for is very simple. It depends on the appraised value of the home and the age of the youngest borrower. For example, a 62-year-old will qualify for about 42% of the appraised value of the home, and in contrast, a 90-year-old may qualify for about 65%. The amounts vary greatly depending on age. Why take out a reverse mortgage? The reasons for people to take out reverse mortgages vary greatly. Some use the loan to pay off an existing mortgage to save them from making mortgage payments. Some need to use the equity to supplement their income a little bit each month. Some want to repair or make updates to their home. Others just want to leverage their asset for other financial planning. What happens when we die? Similar to a traditional mortgage, the house will be passed to the heirs, and they will be responsible for repayment of the loan. This is usually accomplished by refinancing the loan or selling the house, and the heirs will get whatever equity is left. In the unlikely event there is no equity left, or that the house is upside down in value, these loans are FHA insured, so no debt can pass on to the heirs. The worst thing that can happen is there is no equity left. The heirs are usually given a reasonable amount of time to figure out what they want to do with the house, but the timing usually depends on the housing market. Is it safe? Yes. It is important to remember that reverse mortgages are a safe, secure way for senior homeowners to access the equity in their home. These loans are an FHA program, which means they are federally insured. There are so many misconceptions about reverse mortgages, and we would encourage you to view our other videos. Are there different types of reverse mortgages? Yes, there are two main types of reverse mortgages: adjustable rate and fixed rate. Most reverse mortgages are the variable rates, which are tied to a financial index and change with the market. Variable rate loans tend to give you more options on how you get your money through the reverse mortgage. Fixed rate reverse mortgages tend to require you to take your loan as a lump sum at closing. Often, the total amount you can borrow is less than what you could get with a variable rate loan. What do I do if I'm interested? Call us and ask questions. Let us give you a no-obligation proposal and explain the options you may have available to you. We are educators first and sales representatives second. Let us help guide you down the path of better understanding.